All right, we're going to bring Terry Brandt back up, and you can jump back into your presentation with Albina Opportunities Corporation. Terry.
Thank you very much. Well, we left on a great slide. Basically, we've burned through our money and have made all these loans that are paying us back, zero defaults, had a significant impact on the community, and now we're getting down to the end of our amount of capital that we have in which to lend. Hence, I said earlier, one of the reasons for the PowerPoint slide is we're out looking for additional funding. We're going back to our original investors, and we'll be out looking outside of that group as well. Our modest staff has proved that it can effectively deploy over $300,000 per quarter in new loans to Portland entrepreneurs. That's about what we've averaged since we started. And mind you, most of that lending activity really started happening in 2010 and 2011. 2009 was really a startup phase for us. I think we made our first loan in May of 2009 and maybe had 3 loans on the books by the end of 2009. There is significant demand for our money, and if we had access to more capital, we could create more opportunity, more value, more jobs. Right now, we've got over actually $500,000 of loans in our pipeline, small businesses that are frankly qualified to get loans from us, excuse me, that we are having now difficulty funding. We don't, I think I'd mentioned earlier, we don't market ourselves. It's really word of mouth. We're almost afraid to market ourselves. We see such a demand for this capital in our local community that it's while we are out networking, it is done on a very selective basis. So we think we can certainly find small businesses to take another $500,000, and we have projected that we could do $450,000 each quarter. If AOC is to increase the amount of investor capital it deploys, we'll have to build our internal capacity. We're in the process of doing that. We've done a projection of our growth model through 2015. We'll be applying for another CDFI grant for, in this time around, instead of technical assistance that has been instrumental in helping us build our capacity. We'll be doing that. We'll be applying for $600,000 as a small emerging CDFI as a financial assistance award. Very competitive process. It's probably 10 applications to every one that is approved. There's $123 million that has been tentatively authorized by the Department of the Treasury, and so we're hopeful that we will receive some kind of award in 2012. That's a little ways off. Actually, it wouldn't be funded until 2013. But nonetheless, it's part of our process moving forward.
Terry, do you think you would fund a hazelnut operation moving into Multnomah County?
Well, if they qualify.
Where we're much more pro-business, evidently, than they are in Marion County.
That's for sure. You know, we were just having that conversation yesterday about larger businesses that were moving out of Multnomah County into Washington County, and so it wasn't the farm and ranching side of the business, though. So it might be kind of hard to displace the trees. I don't know.
That's a bit of an inside joke. Senator George is a hazelnut packer.
Ah, yeah. Well, I guess you could pack those just about any place.
Not in Marion County.
Apparently not.
Well, I've got a few cards.
You can always call John DiLorenzo.
Always can.
Well, thank you very much for allowing me to impose upon you today. Thanks very much for the invitation. I'd like to leave you with one more thought, kind of a takeaway of sorts. There's currently a large disconnect between local small business and access to capital. This has been talked about by quite a few people with a few ideas for quite some time. Certainly it's been the lion's share of a lot of discussions since 2008. We have demonstrated that we can effectively and efficiently bridge this gap. We represent a small, self-sustaining business model that can actually be reproduced in other communities around the state. However, similar to the small businesses that we serve, we also need access to capital. So what next? As an optimist, I am convinced we can find creative ways to solve this problem. It's the elephant in the room that needs our immediate attention, and I'd be happy to volunteer to help solve that problem. So thank you very much. We'll be out knocking on doors to rustle up some more capital and hopefully have a continued positive impact on our community. Thanks.
Terry, is the focus on the Portland metropolitan area prescriptive in your bylaws or articles of incorporation, or is it just a policy of the board of directors?
Actually, neither one. We could go statewide from a very practical matter with just one person as an executive director. We've had our hands full, actually also just proving the model. Now, we're looking at a business model of growing our capacity to $10 million fund by 2015. Within that, we would be adding some loan officers and things like that. And we have also done a job, my word for 2011 was to stay nimble. My word for 2012 is to leverage. So we've discovered that one of the best ways for us to leverage our little amount of money into the community is to form these partnerships with other lenders. So it could either be, we have a lending partnership with Albina Community Bank. That would give us a platform potentially to go certainly outside of the Portland metropolitan area. And we are accessing the Hillsborough Latino market right now and trying to address the capital access needs there. But we also have a partnership with Mercy Corps Northwest. Now they're a micro lender. This allows them to actually get involved at a higher level of lending. And so a typical example may be with Mercy Corps. We have a $150,000 loan that we're making. They'll take $10,000 of it, but what we really like about that relationship, in addition to other pieces they bring to that equation with some training and technical skills, is that they do the loan closing, documentation, and the servicing. So we don't have to set up our own servicing department and put our capital into that. We don't have to put capital into all the loan documentation side of this thing. And for that, we pay a small fee to our partner for handling that aspect. Again, that will allow us to take a look at other parts of our community. And my reference to the state was that I think this is a good business model that you could start duplicating around the state.
The reason I mention it, and I'll get to Senator George, is that if Senator Boquist or Senator George represent areas outside of Portland and they have constituents who might be good bets for you, they can contact you and you can make loans outside of the Portland area. There's nothing that would bar you from that if you saw a good opportunity.
No. And I say that advisedly, if only from the standpoint, again, we have a fairly well-defined mission statement, which is we loan to women-owned, minority-owned, immigrant, and disabled-owned small businesses. That's part of our mission statement that has qualified us as a community development financial institution. Or we can also loan money to what we call census tracts of interest, which would be low to moderate income census tracts. That then gets us access to other businesses. That the whole thought being, if we can invest money in those low to moderate income census tracts, that money will be invested in, hopefully, hiring folks within that area that in turn reinvest that money back in the community.
And the heart of this process and how it got started is, a number of angel investors who put $50,000 of their own cash in, and so he's also looking for additional investors just to get that out into the public. Senator George.
Terry, it sounds like you're doing hero work, and we appreciate it, and it's great. So thank you for sharing it with us. Just so I understand, obviously lending is a heavily regulated area of law. So how do you guys interface with, say, DCBS, Department of Consumer Business Affairs? How do you interface with the regulatory side of lending? How does that, is that done by your partnerships with those who service the loans? How does that work?
Well, the beauty is, as a nonprofit, we are not regulated. Certainly there's no federal banking regulations that we adhere to. Aside from that, we must adhere to other areas of legal areas, including business consumer affairs, just like any other business would. BOLI, workers' comp. But aside from that, we are a standalone nonprofit that has decided to make these small business loans to our local businesses within our area. The association with other lending institutions is strictly related to our desire to leverage our capital, but has nothing to do with the legal ramifications of that and whether that may help us or hinder it. In fact, to a certain extent, by having a loan participated with a bank that is federally regulated, sometimes, and we've had some experience with this, they are forced to do things with their borrowers, with our borrowers, that we would never do. It reminds me a little bit about the loans that are, the home loans that get sold off, that you start losing control over this community connection with going to your bank, going to your lender and saying, you know, I've been a good guy forever and I've got a little bit of a problem here. Can you help me work it out? That's very difficult to do, especially in today's banking climate, where the regulators are really putting the screws down on banks to take a look at their risk rating in their portfolio, which of course the ripple effect of that is if you have more risk, you've got to have more reserves. And so banks are caught in a little bit of a rock and a hard spot. So for them and for us to partner, we've realized that there's a trade-off. Yes, they can do that for us, but if there's a problem with that loan, our first tendency is to, because of our advisory services, to avoid the problem to begin with. We're working with our clients day one. But if there is a problem, they're going to approach that a lot differently than we would.
Thank you.
Yeah. And the one thing that didn't come out in your presentation is the quality of the people who are the advisors and who are the board of directors. People like John Emmerich, the former CEO of Norm Thompson, I think Al Jubitz from Jubitz Corp. Are there some others you'd like to mention?
Well, Jim Meyer, Criterion Capital, Robert Stoll, local attorney in town. And in fact, Robert, who's been a good friend of mine for years, originally put together a group of folks. I think you were a part of that group to begin with, going way back. And what we have put together is a great group of talent, of people that have been there, done that, understand business, understand how to be successful. They're great entrepreneurs in and of themselves. Ted Gilbert Brothers is also one of the original investors in this. You mentioned John Emmerich. I'm trying to think of going down to Jeff Lang, Gales Creek Insurance. Just folks that know how to see a problem and act on it. It's we are the bulldog. I really like that reference. We tend to take a look at these problems, want to quickly solve them, and move on, because right now, people are starving and needing jobs.
Amen. Thank you very much for your work, Terry.
Thanks you.
Thanks for coming down.
Yeah.
We'll try to, this presentation is being recorded, and we'll see if we can get you up on YouTube so that we can help spread the word about the great work that you're doing.
Thanks a lot. I don't know how to turn this off. But